right. Hello, everyone, and welcome back to the live stream for, of course, the Monday Open. And I hope you had a great weekend with your family and friends and you're ready for a exciting week. Yes, that's right. We've got back the pumper. Roaring Kitty is returned to X. And, of course, all the GameStop people are getting wild on it. Could that be a sign that we're getting a little bit too hyped, or is it just the beginning? We'll be discussing some of that today. Got well over 200 people joining us straight away here this morning. Thank you very much. Give it a thumbs up if you enjoy the stream. And also vote in the poll, bull or bear this week. We'll close that in a few minutes. And then, of course, we'll go into the rest of it. Also, CPI this week, inflation and earnings kickoff continues. So what's going on with inflation? Well, Goldman Sachs believes that core CPI is going to remain consistent with the 0.22 increase for April. This is kind of what they're looking at in terms of where they think the differences will be. And this is, of course, the discussion that most people are going to be having. Now, the one that most people always look to is the stickiest, which is generally going to be rent. So realistically, shelter is going to be the one that everyone discusses, and everything else probably will remain up, down, all around. So yeah, what's going to happen with inflation? Is up good? Is bad? Is that actually bad? Is down good? Who knows? The main thing is that you'll be looking at yields. So really, the result itself won't matter as much as looking at the yields, looking at the US dollar, and of course, looking at the stock market. And as we often say, patience, react, don't predict. On some of these sessions, you can get massive breaks each way, and that can lead into some pretty big moves here. So yeah, you've got some pretty interesting stuff here. What you're really looking for is a movement that's going to trap people, and I think that's a very distinct possibility of this inflation. So let's have a look now at what's going on with the US 500. And you'll notice it's coming in here at 52.35. So is that, a resistance? Well, we've been talking about positive gamma. We've also been talking about where we think the bears could come back to end up getting bulls back in. So that's going to be around this area down here. And if we do manage to get through 52.50, then that's really going to start pushing that higher narrative of 5,300. This week is also OPEX. So trillions of dollars of options expiration, everything you could think of is all about to happen. Okay, so I will have to mute a few times here. As Rommel says here, Kitty is back. And Info says, oof, you sound a little bit. Yeah, unfortunately, I've got the plague, it seems. It's not the one that you guys all think it is, but it's some kind of new super bug. That's what it must be. My son gave it to me, and he's still got it, and I've still got it. So I'm going to have to go get that sorted. I may have to keep it a little bit lighter on today because my voice is basically cracking. But at the same time, yeah, we want to go through the key levels. So let's get into it straight away. So 52.35, we are in positive gamma. That basically pushes our narrative here of if we hold above these levels through the 13th and the 14th, then it's really pushing towards 5,300. So we'll close the poll now because I like to see what you guys think before we end up doing it. So 60. Oh, whoa. There's people voting everywhere. Vote. That was crazy. I was seeing percentages go up, down, all around. All right, so we'll close it now because it looks like a few more polls got in. 60% of you voted bull and 40% bear. So somebody said before there was more bulls than bears. More bears than bulls. But it does look like most of you are bullish. And I think probably rightfully so based on the actual information we have right now. 51.85, 51.75, that's what you're going to need to be watching. So that's really the area that I think is most important on the S&P, and we'll explain why in a second. All right. Okay, let's just quickly go back over here. Yeah. Why did I get rid of my chart? There we go. US 500. Thank you very much, guys, for the well wishes. Yeah, I don't know why. It's unfortunate when you do talking as your main thing plus investing. Unfortunately, the talking does take its toll. So US 500, 51.85. So in here is where I see demand. So if the market kind of falls down to this level, I see a buy around this area. You can see it's in the one-day expected move. It's also the HVL, which basically shows where at least short-term options actually move towards the negative gamma side. So in this point here is where I kind of see buyers. I could see why someone might have tried to short around this area at 52.25. I highly caution against shorting in this current environment. We already know there's a lot of forces against you. Not only are markets incredibly bullish in general, but on top of that, you've got Federal Reserve obviously coming in and doing certain things. You've got pretty powerful forces, being the earnings reports are in general relatively positive in the areas that need to be positive. And I would say overall, it's just a nasty market to be going short in, especially when you're in positive gamma. So remember, if you're in negative gamma, then you can start to look at towards shorts. But with positive gamma, I highly don't suggest with it. I don't think it's really worth it. It's more of a gamble, getting more into the 50-50 kind of run. And as you've already seen, I'm sure it's hurt a few times. So this is where I expect buyers to recommence. If it gets back below this 51.60 kind of area, I think that then we're moving into negative gamma short term. Then we can start to push to the low narrative. You saw before 5,300 becomes the more likely level for the markets to move towards this week. So the longer we hold up, the higher we hold up, the more strength there is in this market. So just remember that, guys, as we lead through. And 60% of you do believe that as well. Also, copper's up 1.35%. Copper is often considered kind of like the lifeblood of the economy. So what that's really telling us is that the market itself is expanding. Now, you may totally disagree with that statement. You might say, well, this is absolutely crap. There's no way that we're seeing it expanding. Why is my copper not loading? But why are we're not seeing expanding economy? But we've got home builders, we've got copper, we've got financials. All of them are going up. So trade what you're actually seeing, not the storyline. You're fed this idea that everything is horrible. It probably is actually. But remember, timing is everything. So, yes, I believe there is something very sick behind. I've been talking about that. It's not just me being sick. I mean, there's a sickness in the market, and that's going to push towards, being very careful over the next 1 to 2 years. Don't get me wrong. I doubt this market can survive longer than that. 3 years would be pushing it. And what I mean by this is, the longer we push up here, the more those types of markets, especially financials, go through and keep going up, the more likely it is that something's incredibly broken behind closed doors. If you ever want to find out more about this, I actually go through it. I call it, it's like cyclical theory. So basically, there are great empires, which is Ray Dalio's concepts of great empires and the boom and bust. Then there are cycles and cyclical theories within that. And there are all of these things that we're not really told, that we tend to make mistakes on time and time and time again. And it actually becomes quite replicable. And when you go through, you'll actually find the same problems that were in the Egyptian Empire, were in the Roman Empire, that were in the Greek Empire, that were in the British Empire, that were in the Dutch Empire, that were in the US Empire right now. So it's mind-boggling that we continue to make the same mistakes, but it's because it's partially human nature. And that can be therefore leveraged off and used to understand what types of things tend to go through. So if you were to actually ask me, do I think inflation will moderate? I think you should be concerned if it moderates. And what I mean by that is, if it goes down too much and it doesn't re-spike and it starts to, show a cut, remember, they're not cutting because it's a great thing. Central banks never cut their interest rates because it's like, oh yeah, we love cutting interest rates. They're cutting it to try to stimulate the economy because they've probably pushed it too far. So you're fed this idea that rate cuts are going to be good. In my opinion, rate cuts are not going to be good. It's going to be a bad sign. And it's going to take us out of the inversion of the yield curve, which is now sitting at 560 days. I actually shared it over on X. This is the business cycle, which is pretty cool. But anyway, well, actually, it's a useless cycle, but that is a concept that people do talk about. So we're at 589 days since we first saw the inversion. Now, funnily enough, average is 589. We're at 561. So we're not quite at the average yet. I estimate we're somewhere behind. We're between here is where we're actually going to end up landing. And we got to hope we're not here, because the further we go out, let's say we see one of these ones that goes to 1,000 days, 1,500 days. If we have 1,500 days of inversion, guess what's coming, guys? What do you think would happen if we had 1,500 days of inversion? Generally speaking, what would that probably tell us here? Chris says here, everyone correct me though, as I'm sure I have stuff incorrect. Says here, I don't pretend to understand gamma, but I think of it as momentum. Right now, rising markets will be more likely to cover and squeeze to go higher in positive gamma. Pretty much that's correct. the reverse for negative gamma. Yes, to a very big degree. Big Silver Hot Dog says GFC 2.0. Spot price probably has it more correct with the Great Depression. Yeah, if you went that long, I don't. The GFC, while really bad, and don't get me wrong, I'm not here to say that I understand what the Europeans, the Americans out in the audience, you guys went through some seriously tough stuff. Australians have no idea. I'll just be real. Like Australians, like, oh yeah, oh the GFC, oh 10% down. Stock market, sure, it fell, but generally speaking, property didn't get hit here in Australia. So most people in Australia like derping around the GFC. But, you know, I think it'd be much worse. Okay. So if we ever did get into that 1,000, 1,500, I would say bunker down, guys. Maybe we could become those those people that have the what is it, the actual bunkers in America, they doomsday preppers. I remember watching that show. It was pretty funny. But anyone anyone here have a bunker out of interest? I know you've got probably a cellar, but you probably don't have a bunker. 1,500 would be terrifying. So we don't really want that. I mean, we don't really want any of this to be real. You guys might say you want it, but yeah, I think it gets kind of bad. I think in here is probably what we're looking at, and what that's going to cause is a pretty deep recession. So just never lose sight of this. Keep this chart. Go save it. Go over on X. I call it a public warning. It's again, you would notice I'm actually not bearish on the market right now. There's a difference between being somebody that's always terrified of markets and somebody that's, you know, looking for the right sectors and the right things to own. So, because, you know, even in terrible markets, there are still opportunities. So let's go back over to this chart. We've got copper up, we've got US dollar down. Now, US dollar weakening is something we probably do expect at around this point. In fact, congratulations, guys. You picked the perfect level last week. Obviously, a turn point for the US dollar. This could be the highest point for the US dollar, and maybe it's actually turning towards a much more downside. But at this point, 104 becomes where I'm kind of looking for it to go. Very nice kind of weakness here in today's session, which is leading into some very nice strength in some of the things that we've loved. So oil in particular, looking really good. Oil in particular looking very, very nice here. Thoughts on why the VIX is up pre-market? Look, we're coming into inflation numbers. So inflation numbers run on Wednesday, PPI on Tuesday. So that's going to spike the underlying VVIX. Yeah, I do like what we see here from oil. So oil, of course, finding a bottom, hitting kind of like an oversold mark as well on things like the 2-hour chart here. I do think that oil is long. We've discussed this. This is our favorite zone. Nothing is guaranteed. It's just a price action base that we like. So I think that oil has found a very, very nice level. Meanwhile, gold is pulling back and actually pulled back a bit more before. Starting to like the idea of getting into more longs versus gold in terms of the overall trade kind of turnaround. So I think anything in this 23.20 to 23.30 zone may have a buyer in it. So this is again another one. Silver, very similar. If you put it on a chart, they all look pretty nice. So some nice moves there. LV Junk and Hauling, $10. Thank you very much for the donation. LV says thanks. Thank you, LV. Appreciate it, man. All right. There we go. So we've got, yeah, LV. Thank you very much for the donation. Appreciate it. And appreciate your always viewing. You've done that quite a few times. That's great. Also appreciate the almost 600 people that are joining us here for the stream. So that's always good. When we unavert from a larger impact than the event itself, when you say when we uninvert from has a larger impact than the event itself, yeah, the inversion doesn't do anything. It's a warning sign that takes years to play out. The uninversion is the more dangerous sign. So, but that being said, I think this time it's going to uninvert, sit there for like 6 to 12 months, then have a problem. So thank you very much, LV. Appreciate it, man. Can you please check out Adobe from Chula Fam? We can have a look in a moment. Isn't HYG falling while S&P is rising? That seems like a bad sign. Let's have a look at HYG. I think it's kind of like floating. So if we have a look at it, what I did mention though is worse than HYG. So junk on junk, the worst junk bonds. The spread between triple C's and B's is starting to get wider. Now, if you actually look at bonds, that means that people are starting to hunker in a little bit. Again, they're warning signs. They're way too early though. We don't see any stock market signs yet of weakness. So, yeah, no, I wouldn't say that's weak at this point. Of course, it was getting weak during that correction we saw recently, hit into this demand, bounced up, and at the moment, it seems like it's stabilized. So where do we see the interest this week? Well, obviously, unlike an oil, I think gold and silver are interesting. I think that the market itself is trying to push that 5,300 narrative. We'll see whether it can do that. Crypto coins, Bitcoin. Let's bring that up. Crypto coins. Will TAN ever get going? Trying to put a bottom on TAN is very difficult. We can look at that later. It does have, I think people want like really huge percentages out of things and they're not prepared to wait. When you try to pick a serious bottom on something that's been accumulating for a very long time, you're going to need to wait pretty patiently. A good example of that was probably Hershey's recently. It's really kicked off. If you have a look at Hershey's on a chart, that's been good. I have been looking at that now for 3 months. I've been watching Hershey's. Never looked at it really before then, but yeah, I had some interest, and obviously Coco got crushed, and that was the go sign. So Toby says I went for silver over oil. Fair enough. And Michael says here, Tom, those long pauses has me checking if my internet connection has stopped. It's just me hacking up, man. 60,000. So we've got here the 60,000 level was actually almost perfectly tapped by Bitcoin. As I mentioned, I feel like around here was that completion of the mini head and shoulders and the ability for a buyer to come back in. I'm not super negative on Bitcoin, as I've said, 57. I didn't initially think that was the low, but obviously I found it while we were in there and I said, oh yeah, this looks better than I thought. 52 is where everyone sees. If we do manage to get through 67, I think we're getting a new all-time high for Bitcoin. It's about right for the timing for everything that's happening. So, with Roaring Kitty coming back as well, maybe that'll get people hyped in crypto markets for no apparent reason. We'll look at GameStop in just a moment. So, yeah, we can see here that we have decent pickup in the last couple of hours. We don't quite have a break above 63.5, which will more solidify this smaller time frame turn. So, yeah, maybe we'll set a little alert in here just to make sure that's happening. But if for anyone that picked it up in these lows, I think you'd be, relatively confident about how it looks. Next question was for solar. So let's have a look. Oop, we don't want treasuries. Treasuries are still at those low levels where we expect accumulation. So solar is going to be a little bit reliant on, let's just say, the CPI earnings. So CPI is, going to be very, very important for this. If we get yields going down, then you have to think at least at the start, solar is going to do quite well. So yeah, solar is going to do quite well off that. And then we're going to, move through the 46, and that would be incredibly bullish. This to me is like a Wyckoff. There's a lot of accumulation base here. Someone's been selling big times. Someone's been buying. I don't mind it around these levels. Though, like anything, can take a little while. So it could take a month to get started off this level. You just don't have the catalyst necessarily just yet. Yeah. So you need that catalyst. LV will do that for you. Can you check out CBRL? Sure can, man. CBRL, Cracker Barrel. Are these the guys that make the cheese? Are these cheese people? I like Cracker Barrel cheese. It was pretty good. Let's have a look here. I bet you someone with massive OCDs looking at this and just getting so grouchy when they see that. Jumping up and down. They'd be not liking it. CBRL, Cracker Barrel Old Country Store. Yeah, I guess this is some kind of cheese company. All right, so let's break that down. It's a bad downtrend, there's no doubt. Nice little weekly rejection wick. Unfortunately, it's going to be very difficult until you get above this high to really solidify the low. But, did take that low as well. This is me where I'd usually practice scaling. So let's say I thought this thing was oversold and I liked its fundamentals, whatever, blah, blah, blah. If I bought this, let's say I bought, it makes a higher high from last week's candle, I'd probably place a stop below, scale. So buy a portion and be how I trade it. And then if it went through here, I'd buy further portions. And then if it pulled back, I'd buy further portions. And that's usually the way I would execute a trade like this or an investment position. There are some advantages of what it's done. I need to analyze a little bit more and further, but yeah, I like the weekly close. So that's good. It's not actually a change of trend or anything yet, but it certainly is. Certainly is showing some signs of life, and somebody definitely bought the dip in a fairly big way. Stay away. The chain is dead, says Nicholas. Waffle House over Cracker Barrel. It's a restaurant? Oh, no. Cracker Barrels are in deep south and usually high sodium meal. Pass out afterwards, biscuits and gravy bacon. Ah. So it's not a cheese company. It sells like sodium killing things. It's a chain of bad southern US restaurants. Well, no one likes it, but obviously the stock market hates it even more. So the sickness on it must be significant. And yeah, considering the economy is actually, on a lot of restaurants improved, you can see that. But it doesn't really change my opinion. If you're looking at it, sometimes like a really bad stock can still get oversold and have relief rallies. So for me, that is a sign of relief rally. And I look, this is the opinion. We all have opinions on stuff. We might say this is the worst thing I've ever done. I would never eat there. It's a terrible company. It's terrible. You could still theoretically trade that sometimes, or you can make the decision of, you know what, I stay away because I'm so negative towards it. But if you really hate it and you're still seeing technically bullish signs, then that usually means it's probably even a better trade. Okay. But it's not an investment. Clearly, this company has significant problems. So different between that and this and trading. Barber / JD pre-earnings. Yeah, we'll have a look at Chinese stocks. So basically, Chinese stocks have been where we're at on the last 3 months. They have beaten the US stocks, and I would say we're probably one of the only channels that really covered them from a bullish perspective. Most other people were yabbering on about how they're all going to die. Now, yeah, they were going to die for a long time, but that narrative's obviously turned. I've noticed that a lot of the ETFs here in Australia that do provide these types of services are messaging me and saying, "Oh, it's time to do it, time to do this, time to do that." Yeah, I mean, to me, it's obviously a decent turn to the upside. I don't like Barber in particular. I think there are other better stocks such as Tencent and others that have done better. But it does look to me like an incredibly good base. Earnings is coming. I don't know if this one will be good, but I do think across the board, there'll be signs of life within the Chinese stocks. So whether it's this one or it's JD, which is a better stock, yeah, I do think there's signs of life. And that's obviously got a great technical base on it, one of the better ones you see. And this has a great inverse head and shoulders on it, which we noticed all of these a while ago now. So now everyone wants to talk about them. Everyone hated them before. Well, what do I say? Is there more length than JD? Generally speaking, I would think so. The reason why is if you took the neckline component, so let's say you took this distance and you trended that out, then you would get around this distance here, which would push you into, that kind of 38, which is obviously a level I've had for a while sitting on this stock. Yeah, not bad at all. So very, very good. Theon All, thank you very much. $10, appreciate it. Zim is running earnings on the 21st. Let's check it out. Thank you very much for the generous donation as well. We'll check out Zim for you. All right, a few people like this stock, so it's not just you, Theon. Now, I can see why. It's on a rally, so people love a good rally. So fairly new, fairly dumped stock. Integration shipping services. So it does have a fair bit of history. All right. Let's have a look here. So 3 days of incredible trade last week. Coming into the earnings, could it be a buy the rumor, sell the fact? Certainly broken trend. So once we got above 1541, that was very strong. I mean, the problem is, can you really enter into here? It's not my type of trade. I know a lot of people just buy and then they basically don't have stop losses, or they just put kind of like stops behind the candles and they look towards that long side and hope and pray that's going to work. For me, I think it's probably going to top out somewhere around 22 on this run. So there is a little bit more juice that could be had in it. It doesn't show signs. You could also argue, though, that that's like a little res, which is sitting around $18. So if it gets through 18, it's probably going to go to 22. And this is a fairly strong trend. It again is not that's not my trade. That's not the way I do things. I just don't like it. It's so difficult. Like, how do I trade that? I've got to go buy, put the stop sign, do candles behind, and then trade it up, or I've got to use an option, and it's expensive. I do tend to like being a pig and spotting things that other people don't know, so I can get in as the party types starts, and I'm prepared to leave these types of trades alone. You're also running a fairly large risk of the earnings. So yeah, there are quite a lot of risks on something like Zim. Thank you for the donation though, and yeah, my level would be around 22 if it gets through this zone, which is around 18. So 18 close, get 22. All right, let's have a look at GME just because Roaring Kitty has come back, so everyone wants to talk about it. I think it's up 20%. Let's have a look here how much it actually is up. So it's up it was up. Yeah, $24. Wow. Okay, I take that back. 39.58%. Is that ridiculous? Absolutely. Absolutely. What is that? So that's 2.5 billion bucks just because the guy went on X. Wow. That is clown world right there, guys. That shows you that we don't live in a normal reality sometimes in markets. Now, it's not something I chase. Again, this is pure gambling. And I want you to know this because I think a lot of people will get on this and they'll say, "Oh, look at me, I made money," or whatever. This is pure gambling. You will be a long-term loser. You are a loser in trading, and whatever money you make, you will lose it all. And that is generally, and if you hold it, well done to you. You've completely proven me. The chance of you holding it, 1 to 2%. Incredibly low. Because to get into this type of stock, to do this, you are a gambling psycho. That is how it is. There are times when this can be replicable, but this is not a time I would do it. The beginning was something fun, something like, okay, people were getting involved in it, the AMC thing. Yeah, there was profit to be made. Here, you are literally you're throwing money at the wall, hoping it's doubling and gambling. And I'm not against that kind of concept. I just think it needs to be in a separate trading account. So something I always tell people is you have an investing, you've got swing trading, day trading, scalping, and then your gambler account. Okay. If you wish to have a gambler account where you might put 10K or whatever is little amount of money to you, maybe it's 1K or $100. I don't really care what it is. And then you want to put some of that risk into these types of things in YOLO. That's cool. If you make money in the YOLO, move it to your other accounts. And then you can go back to that same amount again. And I've noticed this is a tendency of people that have hundreds of millions and billions tend to do that type of thing. So that's good. Big Silver says, I've traded GME 0 times and this won't be the first. Yep, absolutely. And a few people aren't going to like that, but it's just the reality. I just think you're going to lose your money. Insert cool name here says 10K people just unfollowed Tom. Oh, well, if they unfollow because of that, then I don't mind. I mean, it's up to them. I mean, realistically, I just think that you're going to lose your money. I've trained a couple of guys that made about 1.5 mil to 2 mil during AMC's rise. And okay, I say made loosely because their top profit, which I've seen, was that much money. And guess how much they had at the end of it all? $0. In fact, they were negative 50K. Now you might say, why are they negative so much money when they were up 1.6 million? Because they made it the wrong way. They made it with a gambling mindset. And the problem is they kept chasing that dragon, and they were chasing the dragon big time because they were YOLOing 1-day calls and intraday calls and all sorts of things to get those big 10 bangers and 100 bangers. But it just didn't work out in the end. They lost all of it. And then and the worst thing for them is a lot of them were going over tax years, which you can imagine is so bad. So yeah, I mean, it's a disaster. And unfortunately, that's why I don't really like this type of thing. Not because I don't mind people making money on squeezes. Hey, we've been doing it pretty much most of this year. But I just think there's a replicable way and a shitty way. And that's how it is. Mr. Credit Union, do you guys agree? Do you disagree? Let me know. Mr. Credit Union, $20. Thank you very much. Great weekend recap. Appreciate your insights. Thank you very much, Mr. Credit Union. Did everyone enjoy the weekend recap? Obviously, I'm just trying to, warn you that I understand that we what do they call it? The doom porn. Sorry if you're on the speaker at the moment, but that's what people often talk about. I'm dead serious when I tell you that I really do believe, and AMC is getting. I wonder if Nokia is getting if that's still alive, is getting a little bit of relief rally. Um, we're often bombarded with really negative news, and it's very fearful. You might even say my statement over the next couple of years is going to be fearful. It is fearful, but I actually truly believe that we have made a shit show. And what I mean by that is politically driven, poor decision making by all of our governments that don't care who was in over the time has led us to this point. And I think 99% of you will agree, if you will live in Western democracies in particular, that we've let things go and we've just band-aided things for decades. And unfortunately, I saw this coming a long time ago. Ever since the GFC, it's been on a ticking time clock again. And that just means that basically you have to be aware. And when you start seeing gold running the way it is, when you start seeing copper, inflation, all of these things starting to run the way they are, you just have to start saying, well, maybe I don't want to go start up my new business in the next 2 years. Maybe I want to see, chill and save and be ready for, and invest wisely in the things I should be doing. Maybe I don't want to take massive leverage out. Yeah, you might be wrong, but not taking massive leverage out, I don't think is the worst thing you've ever done in your life. So you got to be careful there, if you know what I'm saying. Yeah, if you don't like that, then you can always let me know. Mr. Beefy has a lotto account. Nothing wrong with that, Mr. Beefy. And he has $250 in it. Perfect. That's good. Andy Surfer says speculation accounts are good until it becomes the minimum account. Well, anyway, it's very, very good there. And Stacey F says, does that mean AMC is going to run? Oh, no. Yeah, well, it's already getting the relief. So, look, this could go for quite a few days. I mean, people were messaging me saying Roaring Kidding's back. Everyone's talking about it. So it could run and, could push an AMC to $5. I don't know. It's possible. But anyone that tells you where it's going, it's very unlikely they really know. Thanks, LV. Appreciate it. Tax implications and that kind of gambling are so painful. It truly is. People don't consider it. Everyone is happy at the craps table when the dice are going well. GME is the craps table. Absolutely. How do you track Fed liquidity injections on the chart? It's a mixture of different results, like WACL, etc., that you're putting together. It's all publicly available stuff. Yeah. It's true, but most followers are chasing fast money. I think people are smartening up. I think people understand that, making money, it can be really quick. You hear these storylines, but realistically, you can make incredibly good coin doing the right things. Like if you were buying Chinese stocks 3 months ago, you're up 20%. And you might say, well, 20% is not very good. What if you 2-to-1 leveraged the entire index? Now, that's not much. That's 2-to-1. That's 40%. What if you 3x the leverage? That's 60%. But 60% on a Sharpe ratio that is a lot safer than GME. If you went and bought gold, you made just as much money. If you went and bought Bitcoin, well, that's going to have a way worse Sharpe ratio on it. But in general, the volatility, you can get great money out of others. Even utilities would have given it to you. Tom, do you think TLT will head up now? I think it's found a stabilization point, but I think it needs ultimately rates to come down for TLT to go up or some kind of recession to come in. Just taking people's comments here. I lost many thousands in GME. That being said, I still believe that it is a time bomb that will go off one day. So you mean it's going to be something that goes up all the time like this, like it sometimes comes in and then explodes. I agree. If you find squeeze stocks and they've hit lows and you're prepared to sit in them and wait for these types of opportunities, then that can be where you make the profit. You kind of just like float money in them. But the problem is they've been degrading for so long, especially AMC, that the price has become so low that even a 40% up may not actually be saving you enough. Thanks, Stacey. Appreciate it. I have years of losses to write off from both. Shame me if you will. No, not shaming you, Mr. Beefy. I just think it's good. At least you have it replicated into a separate one. And Chawla says, I want the Adobe now. All right, man. We'll have a look at the Adobe. If I remember rightly, I wasn't that impressed with the chart. Let's have a look. Yeah. So the chart, actually, I don't hate the chart, to be real. So we found a low recently. I like the fact that it's actually done what it's done in terms of rallying. Last 5 days of trade were really bad. Weekly was an excellent close. So 5 days of trade, not so good. Weekly before the weekly, this week, but before last week was really good. Yeah, I don't mind this actually. I think about the 480, where it is right now, down to about 476. I've obviously got 473 for whatever reason. I must have done some analysis on it. Yeah, I kind of like it. I think it's that. Not bad. Not bad. Pretty decent. Pan W, sure man. PANW. Palo Alto, once the talk of the town. Not many people mention it at the moment. Still based off, I would say, pretty much what I expected. Couple of months of sideways action. Generally expected this to go around three months of sideways action. GME going to the moon, it may, but I think it is a gamble. So if you want it, options going to be really expensive. If it doesn't continue to move at that rate, then you're not going to make much. But don't come and blame me on it. I have no idea whether it would continue to moon up super hard. I just think if you're in it, congrats. You might want to, have scale out techniques and philosophies on that. But to buy options, which is the real main way you do it, or to buy, put it in your gamble account, because that's effectively what it is. A gamble account could be worthwhile if you know your risks. So Pan W, I think it's made an okay case for beginning of base. I wouldn't really say it looks like it's active to go flying or anything like that at this point, though. What are your thoughts on SMCI? Andy Surfer, New Zealand, $1.49 sticker. Thank you very much, Andy. SMCI will do that. Not AMCI. SMCI. So, yeah, I was pretty negative on this stock for a while. I've turned obviously more positive on it recently when we dropped to the lows and we saw that nice pickup. So I liked it around in here, 761. It's higher than that at the moment at 806. It's kind of consolidating. I do think we'll get that kind of fill, which almost got the other day. But yeah, look, I like it down here. I don't really want to back down to that price. So in general, I'm bullish on it. Am I holding? Yeah. Do I see any signs of turn here? Not at this point. So there's nothing in here that makes me excited just yet. And what I would do is probably just drive it down to smaller time frames and look for a break of this current coil. Whether that's up or down, we'll have to find out. But what you'll notice is a couple of wicks up here. So break up above that, which would be about 835. That's what I would be interested at. James says, look at XLE on the monthly. It's ascending. Yeah, I like XLE. Oren says yin for the win. Yeah, that's a funny fund. Yin and yang are the funds. There's some Chinese funds. They're pretty funny. Thank you again, Andy Surfer. So if you have a look at energy, you oh, sorry, guys. You will like generally what we saw the other day. Obviously, I'm a fan of the oil price at this point. So I am looking towards that, finding bulls, and you've got that resistance becoming support area. So to me, yeah, it's got kind of a little bit of one bad sign is obviously that it's pulled down when they've gone in legs. So what I mean by that is this is equal to this, which therefore is equal on the pullback so far. So you're going to want to see a new high. But I think oil price is really what you're trading this off, not so much this chart. You're trading it off the other one. Nicholas, thank you very much for your super sticker, $3. Appreciate it, man. Joni will do the Tesla in a moment. And Mr. Credit Union says, have you ever traded the VIX? Lessons learned. Yeah, VIX sucks. There's my lesson learned. Credit Union. No, the VIX is kind of like a gamble as well. It's got crazy option spike costs, so very, very costly. If you ever want to look at why the VIX is so bad, look up a VIX ETF and you'll notice that just over time, like I can't remember, is it VIXI or something like that? This is some crap thing. So whenever you look at an ETF like this, see how it's degrading? So what that's telling you is the cost of the actual option is incredible. And as you run that through time, the cost of the futures rolls are so brutal that this will be like thousands of dollars back in time. Similar examples of this would be Boyle and other. So yeah, I never trade the VIX. I use the VIX as a tool to understand, but honestly, you'd be better off just trading the markets in the direction of it. The thing is, everyone gets into investing and they think the VIX is the easiest trade ever. Buy 12, spikes up, win. It's not unfortunately how it works. So yeah, you kind of get honed. You can't do traditional T on the VIX. Yeah, I agree. I mean, that's probably my statement. Some people totally disagree with me. What I do is I look at it more as a predominant, like kind of like a just levels. So I don't think, oh, here's a change of trend towards the upside for the VIX and the VIX is going to go boosting. That's not how I do it. I just look at levels. We know 20 is important. We know 15 or 16 is important when it comes back down. We know rate of change is important, which I detailed in a video last week. Go check it out. Rate of change 10, that was pretty good. And we obviously know when it's down here, it can spike, but that's not really going to be. This just basically means you're in a bull market. And what you should be doing is looking at sectors, looking at single stocks, looking at all of those types of things, because that's what's going to help you out there. Let's have a look at Tesla. All right, so Tesla's coming down a little bit here, 169. So I've basically stated a few times that in here or in here is where I expect a buyer to come back in for Tesla. Starting to think it might be down at this 163 zone. But also mark out this week, this price up here, because 176 gets cleared. I think the bull is back and the momentum's back into the trade as well after taking this low. So at this point, we're looking towards 163-ish on Tesla. Look, guys, I might have to leave it there just because, I've been obviously muting a bit and I'm not doing too good. So that's okay. Sometimes that happens. And I really do appreciate your time. And obviously, I appreciate you watching the channel, giving us a like, giving us a thumbs up. We will be doing this again next week, so make sure to join in for the live stream. My general thought process to end this up is at the moment, these are my thoughts. We're in positive gamma situation that does tend to lead itself into further bullish runs. Obviously, we've got an inflation number coming here. It's expected to possibly moderate because obviously oil also dropped off a little bit. So maybe it'll look better. If it does, then we'll get maybe some drop of yields. If that happens, then of course the market will at least initially rally on that. I don't think inflation is going to be gone, but anyway, that's just the general thought process. The market is pricing the kind of things that are running right now seem to be gold, oil, both looking pretty bullish on charts, dollar looking more bearish on charts. That's US dollar. So if I was looking at it ahead, that they're the things, they're kind of like the best trades I see. And then in single stocks, really everything is still pointing towards China being pretty good and people starting to cotton onto that and therefore discuss it. GameStop is a gamble, in my opinion. I think it'll last maybe a couple of days, maybe a week at max. I think it'll be relatively short-lived because it'll just be everyone piling in, claiming their apes, and then dumping quickly to get profits. So it's just going to be, who gets left holding the bags. Crypto looks fairly good actually, but does need to close above some of those levels we looked at in today's video. So if I was going to simply say it, I would say commodities look like they're bulling again. US 500 looks like it's trying to keep pulling out the bull wagon. And 51.85 is worth watching this week on the US 500. That level for where the bears could switch in. Obviously, you never know with inflation numbers, so do be aware of the calendar. And the calendar says that on Tuesday, we've got PPI at 8:30 a.m. And on Wednesday, we've got CPI and core retail sales at 8:30 a.m. So that's going to be moving the market the most, and you'll need to be paying attention to that. Now, would I interpret it? No. Instead, I would just look at how the price moves. So let's say the stock market takes a new high, and then all of a sudden it just starts selling off, goes through 51.85. They keep selling. It's probably going to keep going actually after that. Going to keep selling off. If it goes up and it starts pushing higher, I think it's going to gravitate towards 5,300. Sit there, chill at 5,300, let all the options expire, and then we'll see what happens next week. So yeah, I think the bulls are in control of this market at this stage. All right, guys, thank you very much. We'll still pump them out, get a video out by the end of the close. Thank you very much as well, Monica, for your nice message, and I'll message you in a second. All right, thank you, everyone. Bye for now. Have a great day. See ya.